Welcome to TradeTheNBI.com. This is John. This report is for the 31st of July, and we continued the softness coming off of the strong GDP numbers, but were they blowout numbers? Not per se, but it still indicates that a growing economy means there's going to be growing profits for business. Now, are we a little ahead of that as far as what those valuations can be vis-a-vis inflation? If inflation isn't going to be as strong as expected, that would be a little bit more problematic. But what we had noticed before was the opening of the snake mouth right here and the entry of the tongue coming into it, and that began just before the breakdown, which is sell the news right from the highs. And then once we closed there, it became a question of, okay, you're above the ABM, you can stay long, but once you get below, you got to be more cautious. And then, of course, the 76% line became a secondary factor, and we came all the way down to the magenta, still very controlled. None of this is what we would call it outrageous or even modestly dramatic. I mean, this is pretty clean. So we're still seeing a breakdown completely of the shakeout. So now a complete reset here, down to 1.6. At the same time, orange is now starting to fall and steel starting to rise. That's a little bit more bullish because that's the closing of the mouth. It hasn't completely stopped, but it should help reduce the degree with which things might fall. The reality is that you still have green underneath red, just barely. What do we have? Minus 596, minus 577. So a little turn up here could be enough to support it. And we didn't get into a deep oversold. So a modest correction at this particular point. Now, this is an interesting one because we're getting a much better relationship move here of the NQ, the NASDAQ. And that's simply because it had gone much further than the S&P. So its correction naturally would be proportionally a little bit greater, but it's right to the 50%, supported right on that. Still looks a lot weaker than the S&P does, and with negative shakeout readings, hasn't changed. However, not below the red line from the extreme, which means it's gaining some support right here. If we dipped below it and seen a drop into the red, then I think you could have been more with an expectation that it's going to continue to break down. Though you've got nothing here that indicates a buy in any way, shape, or form. You're just getting closing of the mouth, which means you've got short-term buyers that are just pretty much jumping into this key level. We're not seeing institutional buyers in the red or green at this particular point for the NASDAQ. So that's kind of interesting. They're sort of holding off, which means that support could be suspect if there isn't enough juice here for the short-term buyers to hold on, and so that becomes an easy marker. Nice little bolstering element, the massive jump back, really kind of just the falling three method situation where you get the big drop and three bars coming right back to where it was before, so right back up to the 117, still very elevated vis-a-vis the previous range that was down here and then much lower. So this is that quiet support of the S&P by elevating the euro, which is the effect that it has, and continues to bolster things. Plus, rising euro can also help offset some of the trade issues because it certainly makes European goods just a bit more expensive. But it also makes U.S. products cheaper. And if you're charging a higher tariff on those U.S. products, then, well, it sort of negates itself. And of course, treasuries, in this particular case, we've seen the weakness here. It hasn't changed. We got no reset for buy on that, which is more in line with what we expect. This whole rise here has been a little bit counter to what we're actually seeing market-wise. And particularly with oil still remaining at this elevation. It's not so much what the final price is. I mean, we can trade in between this range all we want, but the reality is that this cumulative effect of elevated cost is going to have its ripple effect down the road, and that should impact gold. But as I've postulated before, the current gold trade really is in oil. It's the liquid gold, so to speak. And I think the elevated trade there, some of it has nothing to do with supplying that, but I think it's about having a liquid asset that can be converted very quickly and doesn't require you to store it. In a way, in some cases it could be better than a cryptocurrency, which they've actually been doing fairly decent. We'll take a look at that one in a second. But gold, again, we expected it to be coming back down. It did finally have this dip below the red line and no reset from a steel standpoint as far as generating any significant strength. Plus, you've got to work through some of this really weak shake out at negative 27. That's horrible. But that's okay. It's got to work its thing out. What was nice, intraday action. Well, let me put up the Bitcoin first. It's very interesting because we ended up with some nice spikes going through for short setups right before. We ended up with the decline, and then we ended up with the reset coming in just before this massive up bar. This is some of that wild shenanigans with that low liquidity that you can do, and you can see it was a positive extreme from the first bar, and you pretty much filled in well over 80% of that move right there, and then it produced the exact same thing coming back around. So still 8,000. That's a significant increase from the 6,000 that it was at. So that's a pretty good gain. Relative terms, not if you bought in at 16 or 18,000, but still, it's all relative. It's the same with the ES as we look at it here. We had the breakdown that was taking place, and then we ended up with a lot of little dots as we got the super oversold with the new buy setup. But hey, when you get that, you expect this low to be revisited at some particular point down the road when you get a significant sell signal, which we were posting the sell signal. Well, it was right here on this bar. Actually, I was posting it because we had the spike of the orange in that, which is a beautiful opening with that tongue coming right through. If you see that orange steel breaking down, we were already had green below red, so all of those things were already in alignment. Sometimes you just have to wait for it. You don't expect it to always happen in the next bar. Sometimes these can go 4 or 5 bars across before it happens, but nonetheless, breakdown, and then just kind of floated flat, but you've got no resets. No resets of the orange dipping below, and then we ended up with the cascade lower, and then finally, right when we get the white candle, boom, produced it. And still went all the way back to the low. But what I pointed out, and what was key with this, is that 2802 is a previous level of a white candle from before. So not a coincidence that you would start one again, same particular spot. But as I pointed out on the Skype chat, hey, when this pops, it's going to drop. And sure enough, it popped. And right here we get this spike. Was right there. Came through right at the 50%, and it was enough to bring it all the way back down. So it was modestly decent, pretty good move from there. Now we're looking at gold, about the 50%. Those have had some issues of late, but this one's not presenting with the solid reset or anything like that yet. It's still early. But, this is where that 50% becomes beautiful, because if you get below it, not so happy with the concept of it making it, or the lows keep falling, and what you were hoping for from the target from above ends up dropping down significantly to where it's not as big a return. That said, I'll be sending out the indicators probably during market hours later today. And that way everyone will be set for tomorrow, the 1st, and not miss a beat with the setups. So as always, though, continue to look for on the Skype chat, and I will post relevant charts and setups as we see them develop. Trade well. We'll talk to you later.